Hey everyone, and welcome to The Explainer. Today, we're diving deep into the financial outlook and the actual business model of Plug Power. Now, if you follow the alternative energy sector at all, you already know it moves at breakneck speed, right? And Plug Power? Well, it's a massive flashpoint for market sentiment right now. A lot of investors just obsess over the stock price. But today, we're doing something a little different. We're asking the big questions. Are they just another money-losing stock? Or could they legitimately be the future of a massive green hydrogen ecosystem? Let's strip away all the noise and look at the actual strategic realities. Which brings us to the absolutely crucial question facing potential shareholders today. Is the recent market movement a genuine recovery, or is it a misleading investment trap? It's kind of like a giant puddle. You've got one camp that looks at the situation and sees the dawn of massive long-term value. But then the other side looks at the exact same data and sees a temporary illusion that's just masking historically high costs. So our goal today is to objectively weigh the evidence and see what's actually under the hood. Here's our roadmap for today. We're going to start with the Plug Power debate, then we'll evaluate the current market trends, assess the strategic risks and sector growth, and then finally wrap it all up with a 2026 outlook. Let's get right into it. All right, Section 1, the Plug Power debate, analyzing current market activity. So there are basically two totally different realities for investors right now. A genuine recovery implies that the fundamental viability of the business, its actual path to profitability, is finally being priced in accurately by the market. A misleading investment trap, on the other hand, suggests that all this short-term enthusiasm is just covering up long-term financial weaknesses. We're talking specifically about the historically high cost of hydrogen production here. So which scenario is actually playing out? Well, to truly understand this debate, we first have to ground ourselves in how Plug Power actually makes its money. What is the business model? Basically, their goal is to build an entire full green hydrogen ecosystem. They design and sell electrolyzers, which, if you don't know, are machines that use electricity to split water into hydrogen and oxygen to create clean fuel. But that's not all. They also build the hydrogen fuel cell systems that power everything from warehouse forklifts to massive commercial delivery trucks. So when you look at this company, you're not just betting on one single product. You're betting on an entire hydrogen network, literally from production to delivery to the end user. Moving on to Section 2, evaluating market trends, navigating the evolving energy sector. Now, the broader energy sector is actively evolving right now, and Plug Power's strategy targets this massive shift through three main revenue streams. First up, you've got equipment sales, selling fuel cells and electrolyzers to huge logistics businesses. Second, they literally sell the actual liquid hydrogen fuel to run those systems. And third, they have long-term service and maintenance contracts. That third part is absolutely key because it creates recurring revenue and long-term customer relationships. If the market trend towards alternative energy really accelerates like people think it will, companies that can lock in that kind of recurring revenue stand to gain immensely. Which brings us to Section 3, strategic risks in focus. What investors must navigate. Okay, so we've talked about the upside, but any objective analysis has to heavily weigh the potential hurdles. Navigating these strategic risks is absolutely mandatory. First off, profitability. Yes, revenue has grown, but turning that top-line growth into a sustainable bottom-line profit remains a huge hurdle. Why? Mostly because of the historically high cost of buying and delivering hydrogen itself. Second, you have technology adoption timelines. I mean, it's one thing to have great tech, right? It's a whole different ballgame to get massive global industries to adopt it on your schedule. And finally, the competition. This is an emerging sector, and the competition is fierce, which means Plug Power has to constantly pour money into expensive innovation just to keep up. Let's jump to Section 4, hydrogen sector growth prospects, assessing the firm's future. Despite those very real risks we just talked about, the growth narrative for the hydrogen sector overall is super compelling. To combat those high fuel costs I just mentioned, Plug Power has been investing heavily, and I mean heavily, in building its very own green hydrogen production plants. The idea here is that if they can successfully scale these plants, they could lower their own costs significantly. That would improve their margins and allow them to capture this massive upward trend in global adoption. Basically, if they pull this off, the ceiling for this ecosystem is exceptionally high. And finally, Section 5, the 2026 outlook, the strategic forecast. Looking ahead, the journey from today's incredibly volatile market reality maps directly toward a much more definitive future horizon. As we move from near-term execution, actually scaling those hydrogen plants and expanding those service contracts, we have to balance those high-cost risks against the rapid growth of the sector. Everything really hinges on this. Management's strategic forecast relies entirely on improving their gross margins drastically by our next big target date. And that target date is 2026. The year 2026 really serves as the ultimate guidepost for potential shareholders. It gives us a concrete time frame to evaluate if Plug Power can actually turn all this growth into sustainable profits. Think about it. By 2026, we'll know for sure if those production plants scaled up the way they planned, we'll know if the global adoption timelines were actually met, and most importantly, we'll know if the massive investments they're making today actually translated into a genuinely profitable green energy network. As we wrap up this explainer, you really have to ask yourself where this alternative energy pioneer is going to stand when 2026 finally arrives. We've weighed their super ambitious ecosystem and those three big revenue streams against the absolutely undeniable costs and competitive risks of a brand new sector. So I'm going to leave you with this to chew on. Will Plug Power successfully scale its margins and truly define the future of clean power generation? Or are they ultimately going to become a cautionary tale of vision just outpacing reality? Drop your thoughts on that below. Thanks for joining us on The Explainer today, and we'll catch you next time.